I can't. Okay, guys, with all of these April Fools, like somebody said this the best way. I feel like this whole year with Bravo has been one big freaking April Fool's joke. So it's like, this day is pure hell. No, I'm not buying anything that I'm seeing on social media platforms, but I will trust a few of these media outlets. Now, this is really interesting. Teresa and Louie. Now there is a $500,000 debt on top of all of the other debts that's been revealed. Okay. So we're going to jump into that plus other things. Before we do, if you guys have not, go ahead, pop off in the comment section. If you're not subscribed, get subscribed. Don't forget to hit that notification bell. And I don't know if you guys are paying attention to this, but there has been a lot. Jesus Christ, where do we even? You guys know that we have been talking about the debts of Teresa and Louie for quite some time, right? It's been just kind of rolling out, and it's been over so much speculation. It's been over $3 million. Gia Giudice ended up reporting on it. She talked about this on her Casual Chaos. It has not stopped, but now it's being revealed that there's more. Okay, so Teresa has her own debts. Her husband has other debts. They have Finny Via. That had to file a bankruptcy. And since there's no prenup, whatever debts are brought in during the course of their marriage, those belong to both of them. So let's just kind of go over what we know. We know that Teresa and Louie are facing over $3 million in federal tax liens. Huge, right? Well, not according to the Giudices, because like Gia said, her mom has everything under control. This is really not that big of a deal. It's not, like she will figure it out. All right. Now, a new report is suggesting the government may be able to garnish Teresa's Bravo paycheck if action isn't taken. We kind of discussed this. What would that action need to be? Well, there would need to be a formal payment plan that would be rolled out. And the formal payment plan would pretty much say, like, I don't even know what you would do for $1 million in debt, which I guess that would be a great problem to have because it means that you're making millions of dollars. I always revert back to Karen Huger saying, you need to make millions to owe millions, honey. But the plan, let's just say it's like $20,000 a month, $20,000 a month for the next 5 years until your debt's paid. I just threw out a number, but that would be a formal payment plan. Now, a new report is suggesting that if they don't do a formal payment plan, that is when the government would be able to take action and garnish the paycheck. That's the new report. Okay, got it. So one $551,000 tax lien remains active. This tax lien is from 2023. It remains active and unresolved. What? Where did that one come into play? Did you guys know about this? I damn sure didn't know about this. It's not like these are like $10,000 debts and okay, well, you owe $20,000 to the IRS, or you know what, there's another lien, that one's for $30,000, which these are all still like big amounts to most people. These are 2 something million, 100 and something thousand over here, 300,000 over here, 551,000 over here, and oi. But the good news is that their New Jersey mansion, their $3.4 million mansion, is not currently at risk. But you never know. Like if the liens escalate and they can't pay them off, yeah, I'm sure eventually it could be at risk. And nobody wants to see that happen, right? They reported that Louis Ruelas took out a $1 million loan to pay off his mortgage, pay off the mortgage on the house that they share. That loan was due to be paid by March 24th, 2024. And he asked for an extension. So they gave him March 24th, 2025 with an additional $250,000 tacked on. But tax attorney Dmitry Shuknovic, I believe that's how you say it, weighed in on the situation, giving potential legal consequences, saying when it comes to the paycheck garnishment, if the IRS really is serious about collecting, they can try to garnish wages or go after any source of income, even Bravo checks. Okay. So this is coming from a tax attorney. Now, on the severity of the situation, and I quote, an active lien means the government still believes it's owed the money and has not gotten it, which means they're like, you got our money. We want our money. We're going to figure out a way to get our money unless you figure it out first. And the way that you figure it out is pay up, honey. Now, on the potential for losing their home, the same tax attorney said it's unlikely that the government would seize a primary residence immediately, but in extreme cases, it can happen. All right. Now, there was this one attorney who spoke out, and people did not like what this guy had to say. Let me just play the clip.
Mainly, we worry about late payment penalties. So IRS, generally, it's going to top out at 25%, but really the interest, especially now with a high interest environment that we're in. During the pandemic, IRS, I think they're charging 3-4% interest. Most states about the same. Now, of course, interest rate is a lot higher. So that can be a problem, especially when you're talking about, let's say it's $3 million, they charge you 9% interest. You're looking somewhere north of $20,000 a month just in additional interest. Again, even if you're a high income taxpayer, that can still be a big amount to pay. And you have to remember, she has to pay current taxes on top of that. So when people complain about how much they pay in tax, they're talking about their current year. She's essentially looking at paying past due taxes plus current taxes at the same time. It really can put a crunch on you. So wages, bank accounts, absolutely. If you're not in a payment plan, if you don't have some sort of formal agreement to repay it, they can seize assets. Now, physical assets we don't generally see. So especially if it's a primary residence, we don't see the IRS or the states go after primary residences. Again, if it's jewelry, those types of things, we generally won't see it. You have to remember, it's really inefficient process for them. They have to send out agents, they have to collect it, they have to resell it. Most people, they're not going to recoup a ton of money on it. And so they really will give you every opportunity to resolve the balance short of coming and seizing assets. But again, the bank accounts, like accounts receivables, wages, that's easy. They just send out one letter to a bank or one letter to an employer and can seize the funds. So that's definitely a risk if she's not in a formal repayment agreement. Mainly, we worry about late payment penalties. So IRS, generally, it's going to top out at 25%.
Okay. This doesn't stop. Honestly, I want to hear what you guys think. This is wild. If it's really not about figuring out a way to pay all of this down. I know that her daughter is coming out and saying, like, our family has it together. My mom has it. Don't worry. It's not a big deal. Also, sometimes parents tell their kids that so they don't worry. So who knows? But it really is the interest payments that scare me the most. Those interest payments on such big amounts, I feel like those are terrifying. And you never know, right? Like that could just be a super, super scary situation. Like, what if it is $20,000 a month? I don't know. Guys, pop off in the comment section. What are your thoughts about the $551,000 amount? It just keeps coming. Smash that like button, show some love, and we'll see you next time. Love you. Bye.